Good afternoon, guys. It's Working, bringing you a quick update on EOS. Hope you guys are having a wonderful afternoon. We're looking at EOS to the US dollar 4-hour chart on Bitfinex, guys. And last time we spoke, price was operating within this wedge. It was reaching the upper portion of the wedge. I warned you guys that price may break up to create a double top here, test this zone, and then break back down. We can see that price did break up. It didn't quite make it up to this supply zone between 7.33, 7.42. It stopped short, sitting at around 7.29, and then broke right back down. Of course, that was a bearish indication. Price came back down. I told you if it did break down, it more than likely was going to test this prior low of 6.82. Price came down, didn't quite get that low. It got to 6.89 and then just started consolidating, created a series of lower highs, higher lows, creating this wedge pattern here. And now as we approach the apex of this wedge, more than likely, I think we're going to see a larger movement in price. To me, it looks like that there's a very high probability that price might break down. I say that because we're seeing the volume get, let me pull up the volume here, guys. Sorry, I didn't see I had that off. We're seeing volume start to slowly decline. That doesn't necessarily mean it's going to break down, guys, but it does mean that there's a larger move that's coming into play, given the bearish sentiment of the market. It does seem to me like more than likely we're going to see, I wouldn't be surprised, I should say, to see price break down, possibly create a double bottom, or I should say a triple bottom. And then break right back up. That's very possible. I think either that is going to happen. We hit this 8865 fib level, which is held remarkably well, surprisingly well. Come down, hit that fib, and then impulse back up. Or if that does break, that'll be a very, very high test. If that does break below the 8865, so if we break below, call it 6.82, this prior low, I think it'll be a very quick drop, possibly down to at least 660, more than likely 6.55, which was this prior low over here, the prior low back in, excuse me, back in July. At that point, the bulls are going to be looking for a double bottom scenario. So bottom one, come back, bottom two, impulse up. That's a possibility, guys. I'm probably not going to play that just because the market has been so unpredictable at the moment. It's not showing a lot of structure, at least not for EOS. So I'm more than likely not going to play that, guys. But if you did want to play that, you might want to keep your stop losses extremely tight. As far as market makers, guys, they oftentimes go stop hunting. So a lot of people, if they're going to place buy orders down here, they're going to have their stops right below, or excuse me, right at this wick. So if you guys do play this, I would suggest, if you have any chance to avoid stop hunts, set your stop loss if a lot of people are going to have their stop loss sitting at about 6.55, I'd have my stop loss at 6.45. That's just personal opinion, not financial advice, just a personal opinion. So if price does break up, we're going to be wanting it to take out this prior high here of this structure of 7.29. At that point, we're going to, all right, if it does take that out, first of all, I'd be watching for a bounce at that point, possible to create a double top of this structure and impulse right back down, not impulse, but bounce right back down into this demand zone between 6.90, 6.60. However, if it does break above 7.29, guys, at that point, this is going to be a very strong resistance in my opinion. This is a very strong supply zone between 7.33, 7.42. So if we do break above that, guys, that'll be a very, very bullish sign. At that point, we're going to be looking to take out, excuse me, guys. At that point, we're going to be looking take out, excuse me, I should say at that point, if it does right above 7.42, I think it'll be a very quick rise. There's not a whole lot of resistance between 7.42 and the bottom of this market, of this order structure here at about 7.72, 7.70, call it. So I do think if we can break 7.42, it'll be a very quick rise to at least 7.70, and then I'll reevaluate again at that point. Looking to the downside, as I told you guys, this demand zone, if the 6.82 breaks down, it'll be a very quick drop to more than likely 6.60 or 6.55, and at that point, it'll be a very big test. If we do break 6.55, I do more than likely think that price is going to drop into this $6 to 6.7 or to 5.75 zone down here, support zone down here. But we're not quite there yet, guys. So let's just wait and see how this plays out. If we zoom out to the larger, bigger picture, this is on the daily. Remember that we have this descending resistance line that's been in place since May. Price has tested it 1, 2, 3, 4, 5 times. So if we do get above this zone and we do start to test it, that'll be, once again, more than likely that would sit somewhere around 7.45. If we can get north of this descending resistance line, it'd be a very, very bullish sign, guys. We'll have to wait and see how this ends up playing out. We can see on the daily chart that price is well below the 8-day moving average represented in the blue line. If we can get above that, if we can close above that today, that'd be a very, very bullish indication. We'll have to wait and see if that ends up happening. If we zoom in here on the 4-hour, it becomes very evident on the 4-hour chart. We can see that the Bollinger Bands are starting to bottleneck. They're starting to squeeze tighter and tighter. We can see the 8-day and the 21-day moving averages, exponential moving averages, EMAs, represented in blue and yellow, are starting to converge. So that's a sign as well that price is probably going to make a larger move. If I blow it up here, we can see price just rose above the 8-day EMA on the 4-hour chart. Let's see if we can get it to close up above that. If we can get on the 4-hour chart price to close above the 21-day EMA, be a very, very bullish sign, guys. So let's keep our fingers crossed. Hopefully that's going to happen. As I said, the fact that we're getting this conversion of Bollinger Bands, the fact that we're getting the 21 and 8-day EMA start to converge together, and the fact that we're having volume start to slowly drop off does indicate a larger move is coming, and we just have to react to price as it happens. As it comes in. As I said right now, guys, if we look at our indicators, we're not seeing any divergence at all. We're not getting really indication of which direction price is going to go. If I come out here to the daily, look at the daily RSI, price is still remaining within this wedge. It's been tested 4 separate times. As long as it remains within this wedge, guys, the bulls are still, that shows you the bulls are still in this fight. If this does break down, guys, I think it'll be a very quick test of 655, and then we'll have to wait and see if that ends up holding. But as long as we can remain within this wedge on the daily RSI, guys, it's a very, very bullish sign. And as we approach the apex, of course, the larger move becomes more and more probable. So once again, we'll have to wait and see how that plays out. Looking at the 4-hour, excuse me, guys. Looking at the 4-hour RSI, we can see that it's sitting at about 44, just kind of a neutral, waiting for a move. If we zoom in here to the 1-hour RSI, certainly we can see creating a wedge pattern here, just like price was. So that's not going to continue for much longer, guys. It is going to end up having to break. It can't consolidate and get squeezed together for very, very long. In my opinion, it does kind of look like it's going to break to the downside, but let's wait and see how it ends up playing out. Looking at the 4-hour stock RSI sitting dead neutral. If we pull out here to the daily, look at the stock RSI showing oversold, suggesting that it may end up rising up. We'll have to wait and see how that plays out. We know the stock RSI can remain oversold for a very, very long time. So again, guys, we'll just have to wait and see how this ends up playing out. So unfortunately, I can't give you much indication of which direction price is going to go with any kind of certainty at the moment. I would just say you have to react to whichever direction price goes. The market makers are manipulating this market heavily right now, and we're kind of at the mercy of their, at the mercy of whatever they decide to do. But we doesn't mean technical analysis out the window. We can react as price does. So I would suggest do not get jumping into any kind of a trade. Wait for the trade setup to come to you and then act accordingly. For example, once we get down here to 6.55, wait for that setup to come, possibly play a double bottom scenario where we end up impulsing up from there. Doesn't mean it's going to happen. Keep your stops tight. From up here, guys, I'd be playing a very quick short possibly. Come up, price ends up hitting this 7.33, the bottom of this supply zone. Play a very, very quick short position, 7.33 down to 7.414 would be a very quick, good logical play with a very, very tight stop, as I said, in my opinion. If we do decisively break above 42, guys, 7.42, I think it'll be a very quick rise to 7.70, and once again, with a very, very tight stop. So wait for the price, wait for the trade setups to come to you. Do not force a trade at this point. From an Elliott perspective, we are still sitting here on top of the 8865 fib. That's a very, very deep retracement. However, it does not invalidate the 1-2, so we still do have a possible valid 1-2, then waiting for the 3. We'll have to wait and see if that ends up playing out, guys. I'm not saying that is going to play out, but that is still a valid count as of right now. So I'm going to go ahead and wrap it there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. And until next time, guys, please trade safe. This is Workin signing out.